The global creator economy and the experiential live event industry that supports it generates billions of dollars in annual cash flow. But as this economy scaled, a structural friction emerged. The creator of value, the trusted individual or the local event, became separated from the point of transaction by layers of distributors and media networks. The digital revolution built e-commerce platforms to digitize the storefront. It built social media platforms to digitize attention, but it failed to digitize the relationship-driven commerce that actually connects the two. Because of this disconnect, top creators can generate immense informal cash flow, yet they are excluded from traditional institutional banking because they lack conventional corporate payslips. The core problem in modern commerce is not a lack of audience attention. It is a failure of financial attribution and verifiable data, connecting cultural influence directly to a financial settlement. Look at the systems enterprises use today. Ticketing data is trapped in isolated event platforms. Influencer data lives on static agency spreadsheets. E-commerce transactions are locked in proprietary retail ERPs, and the final financial settlements occur in disconnected bank ledgers. For a chief marketing officer, dropping a $50 million budget into stadium or creator sponsorships means those dollars disappear into these silos. They cannot map that spend to actual balance sheet revenue. For a chief risk officer, the data gap is equally restrictive. Banks cannot underwrite loans for creators because their risk models require the predictable data of those missing corporate payslips. Solving this requires abandoning these fragmented software applications and replacing them with a unified commercial infrastructure. Relying on this fragmented architecture transforms marketing into an unquantifiable cost center and leaves banking institutions blind to the actual cash flow of the creator class. Sponzar approaches this problem by utilizing a monolithic intelligence engine exposed through modular operating systems. The bedrock is the platform kernel, the centralized nervous system built on 3 pillars. First, the identity layer collapses disconnected user labels into a single commercial identity. Second, the wallet layer is a double-entry ledger instantly routing transaction funds with zero leakage. Third is the audience graph. This layer mathematically maps the precise relationships, tracking exactly which creator influenced which fan and which brand sponsored which asset. Without a single kernel governing identity, ledgers, and relationships, mapping a cultural touchpoint to a specific financial settlement remains a matter of guesswork. Sitting on top of this kernel are the execution engines. These are the modular front-end inputs that actively generate commercial interactions. This documentation details the Creator OS modules. It centralizes creator operations, enabling brand collaborations and content delivery through integrated media kit builders and partnership CRMs, functioning as a complete enterprise workspace. Then there are Commerce OS and Event OS. They execute headless digital checkouts and manage physical gate access, natively within the creator's or the event's own context, eliminating the drop-off of redirecting users to external stores. Operating in emerging markets also requires a robust offline architecture. Sponzar uses progressive web apps and local database caching to ensure functions like gate scanning and vendor payments execute without delay, even during total internet outages. The moment connectivity is restored, these offline systems synchronize their data back to the central kernel. By owning the execution of both the digital click and the physical gate scan, Sponzar eliminates the data gaps inherent in stitching together third-party tools. While the execution engines generate the data, the intelligence engines are the backend value layers that ingest that data and translate it into executive metrics. Attribution OS maps the exact user journey. By connecting a cultural touchpoint directly to a financial settlement in the ledger, it replaces vanity impressions with closed-loop multi-touch attribution to determine exact return on ad spend. Financial OS operates as the multi-party rules engine. It automates revenue splitting and triggers instant payouts for thousands of creators and vendors simultaneously, removing the need for manual reconciliation. This is the architecture for Institution OS. It bridges the creator economy to traditional finance by generating a creator financial passport and a proprietary credit scoring engine, translating raw ledger histories into institutional risk models. This data is protected through secure API security and explicit user consent flows, ensuring banks only pull the financial histories creators specifically authorize. These intelligence engines take historically unmeasured cultural influence and convert it into bankable commercial assets and verified corporate revenue. To understand how intelligence flows through this system, we have to look at Sponzar's event-driven architecture, which decouples front-end execution from back-end intelligence. Consider a scenario. A fan clicks a custom link and purchases a physical event ticket directly from a creator. Instantly, Event OS registers the ticket sale and fires a system event. Attribution OS catches it, attributing the sale to the creator and brand. Simultaneously, Financial OS splits the revenue A20 in the ledger. In that millisecond, Institution OS adjusts the creator's credit score. Because this routing is asynchronous, the system can scale horizontally to process millions of transactions simultaneously, ensuring data integrity without database locking or system lag. So large enterprises, the primary objection to new infrastructure is the logistical risk of migrating an entire corporate tech stack at once. Sponzar enables a modular land and expand strategy. A bank, for example, can deploy the Institution OS API to access underwriting data without adopting the front-end execution tools. This enables specific industry playbooks. A traditional bank can integrate Institution OS and immediately launch a targeted creator vehicle finance product. The bank minimizes its risk because Financial OS operates as an automated escrow. It intercepts and deducts the loan repayment directly from the creator's incoming ticket or merchandise sales before the payout reaches their personal account. Because this source deduction alters the risk calculus, it drives loan default rates below those of traditional corporate employees. Sponzar functions as a decentralized financial clearinghouse, a macroeconomic layer that integrates informal creator microeconomies directly into global institutional capital.